Hey guys, welcome to this week's podcast episode, and I'm happy to introduce Michael Arries to the show. And he's been featured on Kerry Lutz's Financial Survival Network, Alternative Investments. He's going to talk to us all about precious metals exploding in price right now. And it's going to be a fantastic conversation, especially in today's economy based on debt, government debts, all these liabilities, wars. And so, Michael, welcome.
Well, thanks for having me here, Chris. I appreciate it. Good to be here. So thank you.
Yeah, just for the audience, the internet is spotty because it's hotel Wi-Fi, but we'll do our best. But yeah, talk to us about how you got started and what you do and how you help clients.
Yeah. Well, I work for a company called McAlvany Precious Metals. They're in Durango, Colorado. They've been around 50 years as a family-owned precious metals company. It's been passed down from father to son, so kind of a legacy intergenerational company. And I've known about them most of my life. My parents got their newsletter back in the 90s. They started buying precious metals even before Y2K. I've been buying gold and silver for myself for 25 years now and just kind of following these markets and seeing what they're doing. So it's been kind of a journey for me, and then been able to work for McAlvany for about 14 years now. So I've enjoyed helping clients understand these markets and why to invest and all of that.
Yeah. So, kind of talking, I've always, I've diversified into gold. What's
Mm,
interesting was I bought silver back, in 2010, 2011. And back then
mhm.
the price was like 22 and then I saw it fall to like 8 or 9. And I was like, ah, yeah, that's,
Yeah,
and then I never saw the price move, but now it's moving a lot. So what are the main
yeah.
factors driving gold and silver to the newest all-time high? What's going on here?
Yeah, and even back then in 2011,
Yeah.
silver went up to $50 an ounce. It had a big jump there. Both the metals set a new high. They came back down in like 2015, and then they've been starting to climb again since 2019. And really, it just comes down to the Federal Reserve printing too much money. And I shouldn't even say money; they're printing too many dollars. When it comes down to definitions, gold is money. Money has to be a store of value. It has to be something that maintains its purchasing power. So a dollar bill in your wallet, we call it money, but it's really a currency. I'm sure a
Uh-huh.
lot of your listeners know that. It's a currency. You can trade it for goods, but it's not a long-term store of value. And that's what gold and silver are. They're real savings. They're a long-term store of value. So the more that our central bank prints dollars out of thin air and devalues each one of them, the more they print, and they've printed tens of trillions since COVID. The more they print, the less valuable they are. But something limited in supply, like gold and silver, they go up in price. Commodities in general, and especially the monetary metals like gold and silver, they're going to go up in price the more money we print. And the money printing has been out of control crazy, and gold and silver have not accounted for all of it yet. They can still go up 3 to 5 times in value, maybe more, to account for all that. So they're an undervalued asset to own, but ultimately they're your money. They're your cash under the mattress. They're just a better form than the dollar is.
Yeah. And it's quite interesting, especially in these day and age of unsound money and
Mm,
government. You were talking about government debts and debt to GDP and demographics. And people are awakening to this fact. And what's interesting is so this gold price, recently hit 2.3K, but it's been saying that governments don't like gold, they don't like silver. And I was actually reading a book about silver, and it was like, yeah, this, it's a commodity that's used in electronics and everything, but the price never even moves. So, and J.P. Morgan was fined for manipulating the markets.
yeah.
So, even though these are real money, governments
Mhm.
are manipulating it. So, how do you reconcile that?
Well, just the fact that the price has been going up for a long time despite the manipulation, it probably would be much, much higher without all that trading they do to spoof the price and then sell it and push it back down. I mean, and it's crazy too, Chris. I mean, all these traders at J.P. Morgan and Deutsche Bank in Germany, a couple of guys went to jail and then they fined the banks like $30 million. And it's like banks make billions of dollars a year. That's just a little cost of doing business to them, they don't care. So there's really been no, consequences for that. But nonetheless, gold has gone from $200 an ounce to now over $2,000 an ounce in the last 20 years. Silver from $4 and now it's $30. So despite the market manipulation, they are going up over time with inflation and with the money printing. So, and when you say, the government doesn't like gold, it's interesting. They like gold. They like owning it. They just don't want us to own it. So central banks have been buying gold like crazy the last 10 years and hoarding it. They just don't want us to have it. They want us to use their worthless dollars that they print, and they'll keep all the gold. But anything we can buy, like if you're buying gold, that's freedom and that's privacy that you're taking back control of at least some of your money. So
Yeah. The other question I have is because if you look at the price of gold and silver, if you look at last 15 years, gold, it's been, I think it's 2.5x, a little bit more. And then you have to look at the price of gold in terms of like how much purchasing power, like how much real estate, how much gold it can, or how much oil it can buy. But one thing that was really interesting is actually if you look at like the S&P, traditional 8 to 10% year over year, Nasdaq, and you look at the rate of inflation, and then plus taxes, debt, just the overall volatility. It's actually, Nasdaq is actually barely keeping up. It's actually going down. So, but even though your price of your stocks are increasing, your portfolio value is increasing, you're actually losing your purchasing power. So, talk about this idea of, the gold price, and is that enough to combat what central banks and governments are doing to the money supply?
Yeah, good question. I think it has been. I don't have any exact numbers on its, rate of growth every year compared to inflation. It's just that, really from the bottom of this bear market in early 2000s, and then it entered a bull market for the last 20 years. Yeah, it's gone up 8, 9 times, pretty much eight. I think you could safely say 8 times in value. So, I don't think that has, it's not falling behind inflation. I think that's doing enough to keep up with inflation. We can probably see a lot of things in our purchasing power where prices have tripled since the early 2000s. Groceries cost a lot more, but owning gold over time, over enough time, has maintained your purchasing power from inflation, and at certain times has big catch-up moves. It doesn't go up perfectly in a diagonal line every year, but at times where there's uncertainty and people are buying gold and the market's buying gold, there are times where it has a big catch-up move. So 2011 was one of those, kind of from 2008 to 2011, and we're entering one now. When gold went above 2100 a couple months ago, that was a huge ceiling that it blew through, and now the sky's the limit. I mean, it can go $3, $4, $5,000 before leveling off and maybe setting a new normal for the next generation, maybe more than that. Its implied value is actually, compared to the money supply, is actually quite a bit higher. But even just it doubling in price from here, it's ready to run. It's got nothing holding it back as far as the trading on the price charts, and there's enough uncertainty and chaos in the world to drive the markets towards something real and something without counterparty risk at this point.
Yeah. The other question, piggybacking off of that, there's for a lot of for example, my parents' generation, grandparents, they're like always go to gold. They lived through wars and famine and all of that. But the newer generation, kind of the millennials, the younger Gen Xers, definitely Gen Z, they're looking at their gold and they're like, yeah, I can carry basically probably up to $10,000 worth of gold through an airport without getting caught. I'm sure you still get caught, but but I can, on a hard wallet, I can hold 10 million of Bitcoin and nobody would ever know. So, kind of talk about this idea where, especially Bitcoin, the other coins are kind of still early, but the price of Bitcoin versus the performance of gold and silver, compare that, as well as more portability and kind of generational preferences, all of that.
Yeah, it's an interesting question. I think besides, any generational or cultural preferences, because certainly if you go overseas to India or China, it is long-term family wealth, they buy it and hang on to it. We don't see that gold again, and it's a little bit different here. But there are enough people that still see it for what it is and believe in it. But I think
Mm.
it's really a matter of educating the younger generations more, because when it comes to Bitcoin versus gold, I'm not negative on Bitcoin. I'm not saying don't own it, but it's not a replacement for gold. It doesn't do the same thing as gold. Yeah,
Mm.
it's fancy, it's portable, it's fast as far as transactions go, but Bitcoin's been around a couple decades at the most. Gold's been around for 5,000 years of human history, and it has survived every empire and every currency that has ever come and gone. Roman Empire, Ottoman Empire, everything else. When they devalue their currency, people go back to gold, or whoever's making, actual gold coins that aren't, devalued with copper in them. Like humankind goes to gold for value and for money. And we've been doing that for 5,000 years. So that has a track record. And even in today's modern technological society and all the improvements we have, I mean, you can still have a power outage. You can still have a hurricane go across the East Coast and put everyone without power for weeks. That's still possible. And you can't do anything with your Bitcoin at that point. But, your gold and silver coins you have in your hand, that's real unencumbered money that you can trade with, you can barter with. So I'm not saying, dump your Bitcoin and buy gold, but I'm saying gold is not a replacement either, or Bitcoin is not a replacement either for gold. You still have both. Gold has tangible intrinsic value in and of itself that you can hold in your hand. That's something that you still want to have in this world. That's something that's still a part of diversifying your portfolio. Moving Bitcoin overseas, yeah, it happens in a second. Moving gold overseas, it's long and costly. But on the flip side, you can hold your gold in your hand. It's not a number on a computer screen, and you'll always have that. And Bitcoin, I mean, it has its vulnerabilities, and it's not tangible. It doesn't exist in our world at all. So there's uses for both and different advantages of both.
Yeah. Sounds like, you can own both and kind of use one for a more stable storage of wealth, and another one's like faster and
Mhm.
kind of more fancier and more portable. And
Well, yeah, because Bitcoin's an alternative currency. It's not money. It's not a store of value. It's an alternative currency to trade for stuff and buy stuff. It's been pretty volatile compared to gold. It's not a good store of value. And if it still goes to 100K and beyond from here, great. But it's something where you want to, use it as a, decentralized payment system, whereas gold is your long-term store of wealth. That is always going to be there. That's going to protect that value. So, you may have businesses or rental properties and income streams, but some part of your portfolio needs to be in that gold and silver position where it's like, you know, the worst could happen, all the rest of that can go away, and that's still there and that still has value. And
yeah.
that's your long-term wealth protection. And right now it's undervalued. It's going to look like a growth asset for a few years too.
Yeah. My next question is this idea of gold versus silver. And like for example, my parents, they're like, yeah, silver is worthless. I only go for the gold standard. I only buy gold.
Yeah.
And then, but
Yeah.
talk about how silver fits into your portfolio.
Yeah, well, silver is an interesting play. I'm glad you asked that question because yeah, there is that idea out there where it's just, oh, buy gold, and
Yeah.
silver, it's not looked on as favorably, but silver's a really interesting play. So we want to have both. We want to own precious metals. Within that, sometimes I'm going to be heavier in gold and sometimes heavier in silver. The reason is
Mm.
silver is a smaller market. It's more volatile. It plays the same role as gold as being a precious metal and a store of wealth. So they'll go up at the same time for the same reasons in general. But silver will make bigger swings up and bigger swings down. So we can use that to our advantage. When both metals are going up and silver outperforms, great. Let's be heavier in silver and get that extra performance. And when they're both coming down, well, let's switch some to gold. Gold will hold up better. And, we wait for silver to bottom out and be a better buy again. But also, the way our company does it, we'll compound our ounces. We'll actually get free ounces of precious metals that way. So I don't know if you've ever seen that or heard that, Chris, but looking at the relationship between the two, we can plot it on a chart. We can see the high points and low points. And if we switch at one side or the other the right way, we're getting free ounces of one metal for the other. Whenever one outperforms, trade it for more ounces of the other one, and make sure we stay on the right side of that ratio, having more of one or the other, whichever is set to outperform next, whichever one is more undervalued. So it actually works really well over the years to have these big arbitrage trades and compound your ounces. So something that makes silver a little bit useful. We want to have both. But silver is an interesting play, and right now is one of those outperformance times where gold has already set a new high. Silver's got to almost double to set a new high, and it will do that. It'll make a big catch-up move and catch up to what gold has already done in relative terms, but it's a bigger percentage move for silver. So we're about to get a bunch of extra growth out of our silver. Then we can trade some of it and get free ounces of gold. So they're both useful as we look at the precious metal strategically and kind of take advantage of that dynamic play between the two.
Yeah. And I love this idea how you explain the concept of ratio trading and this idea where at times when silver is undervalued compared to gold and you can buy more, and then when it outperforms you, trade that in based on the gold silver ratio. So kind of talk about this idea of how much should you allocate to gold, how much should be 50-50, should be 60-40. Talk about that.
Yeah, that's a good question. So within your precious metals position, and that can be, whatever someone's comfortable with. If someone's like, oh, I'll put 5% into gold, I think that's too little. Like if you really want a safety net, if you really want a, insurance policy for your portfolio, 10% might be a bare minimum. I think right now, the way the world's going, 20 to 30% is not really a bad idea. It's a big exposure to physical metals, but having something real, having something that's poised to grow, I think is good. So whatever in that range, when someone wants say, I'm going to put this much into gold and silver, right now, I would put 2/3 into silver and 1/3 into gold. Whatever you purchase of metals, let's do 60 or 70% in silver and 30 or 40% in gold. Have that extra silver where it's now set to outperform. And by the time it sets a new high and silver goes over $50 an ounce, it'll be a much bigger percentage move than gold. It's already doing that. Gold's up 20 something percent since the low earlier this year. Silver's up 48% from its low point to its high point recently, just this year, the last couple months. So it's starting to outperform gold, and it's still got to do that for a ways. So let's do more than half of your metals position in silver, and then at the next ratio kind of trigger point, the next turning point, then let's say we move a 30 or silver into gold, get some extra free ounces of gold and start shifting and capture that over performance in some extra ounces, but still be balanced, still have some of both.
Yeah. A follow-up question on that is the question is, kind of this market cycles. Talk about can you talk about, silver busting, busting out to all-time highs. And I didn't really understand why silver broke out to $40, back in the early 2010 period. It shot up and then it went down, and it was, kind of just dead for decades. But what, you see the silver price peaking in the next year? Is it kind of like a 10-year cycle? Is it just kind of like a pump? Talk about, these, how long these cycles take to play out.
Yeah, good question. I don't always follow the cycles. I've seen different people plot like an 8-year price cycle on gold and even a 15-year price cycle on gold from some of its different swings from low to high. So we're heading into maybe just a couple years left for it to maybe make a big move to follow some of those cycles. So we'll see how they go. I think overall, so backing up, overall with precious metals, they've been in a bull market for almost the last 20 years. And I think we still have maybe 5 years left. Maybe it goes to the end of this decade. Maybe it ends a little sooner, but we're heading into what I think is the final phase where it really shoots up and has its final peak and its final blow off that happens in every bull market. I think we're heading towards the end, and I don't think it's a year away. I think it's going to take longer than that. So maybe it's 5 years plus or minus, but we'll see. But we're heading into this big final phase. And right now, silver's heading back up. So you had asked before, back in 2010, 2011, silver went way up. It had set a new high at $50 an ounce, or I guess reached its a previous high at $50 an ounce. And you know what happened? I remember this, Chris. May of 2011, the Commodities Exchange changed the rules, changed the margin requirements, and they forced a bunch of selling, a bunch of liquidation in silver
Mm.
contracts. And so it pushed the price down. It's not like people were lining up to get rid of their silver, but in the commodities exchange, where it's just paper, it's just futures contracts, they forced it down from 50 to almost 40 in like a week. And it was just pure market manipulation. It was just changing the rules. It wasn't people changing their minds about silver. It was the market regulators changing rules and forcing liquidations of
Uh-huh.
silver futures contracts and pushing the price down. So they capped it. They didn't let it go beyond 50 last time. And,
Yeah.
gold and silver came down after 2011, kind of bottomed out at the end of 2015. They've been slowly climbing their way back up, broke out in 2019, started a big move up. After COVID, gold set a new high again. Silver still lagging. It was about halfway towards its old high. And the last 3 years, they've gone sideways on the price chart, kind of consolidated, and now breaking out again. So now gold's in brand new territory, never been this high before, and silver's starting to catch up to where it'll go past its old high of 50 and catch up to where gold is and be at a relative new high. So those are just kind of the market dynamics they're going through. I think the reasons are, again, the money printing from the Fed, the uncertainty in the world, the shift from financial assets to commodities until we have some kind of good outlook on the horizon and people are willing to take risk and invest in other things again. The stock market's just been pushed up by Fed money printing. It is not in sync with the economy at all. So that can still have a big crash. But being in tangible assets, being in commodities, being in the monetary metals like gold and silver, that's the play right now, at least for a few years until things normalize or stabilize. But I don't see that happening. We have no good political leadership. There's plenty of potential bigger wars on the horizon around the world. So now's the time to be like, all right, let's have some real money. Let's protect. Let's see how we get through this mess, and then we'll look at doing something more risky later.
Yeah. Yeah, it's quite interesting because there's the liquidity cycle, which is basically the money supply and interest rates, and then there's like the business cycle of the economy. And especially with the Fed printing money, and that's good for like gold and silver commodities. It's good for tech, and then there's the business cycle as well, which kind of brings me to this performance, like your portfolio. You talked about market manipulation. It's like, yeah, I mean, you say that gold and silver are sound money, but if the government doesn't want you to use it, they will do everything they can to pump other things up that benefit them and kind of screw you over. So it's kind of like, but the other interesting thing is, I had this question about, where gold, silver versus real estate. And a lot of doctors, they're like, why hold gold? Why hold silver? These are just, they call them dead rocks. And then they're like, yeah, real estate is better because you get tax advantages,
Yep.
you get leverage, you get cash flow. So why we're talk about gold and silver in comparison to real estate.
Yeah, that's a good question. They're actually a good complement to real estate. So, on your previous point with government manipulation, I just don't think they can hold it down forever or keep it from getting to where it's going. If you look at the 1970s, we had a big bull market in precious metals, a lot of inflation in the 70s, and where prices got to for gold and silver compared to the money supply then. If they do the same thing today, so not anything crazy, just gold and silver doing what they've done in the past, in today's dollars, we'd have $10,000 gold and like $200 silver, maybe more than that. So it's like
uh,
they're very undervalued. If they do a terrible job historically compared to what they've done, they still might double or triple. And it's like, we're going to be happy with that. But I think they could still do a whole lot more than that. So it's just, they're an undervalued asset. But when you're talking about comparing to real estate, Warren Buffett said, oh, it's a barbarous relic, it doesn't pay me anything. But the point, that's kind of the point. That's kind of the point is having something that basically is always worth something. It never goes away or goes to zero. And I guess the fancy term for your listeners is there's no counterparty risk. There's no one else involved to have to give gold value. Gold is money and it's valuable because of what it is, and it's limited in supply and it's sought after all around the world. It is valuable because of what it is. If you own stocks, some company, some manager has to make sure they don't tank everything or you get nothing back. And it's not like that hasn't happened before with different companies going out of business or funds going to zero if you have a certain ETF, or you could have a mining stock and the mine in Colombia, the government takes it back and then that share's worth nothing. So, your gold's, it's not like you put everything in gold, but you have some amount where you're like, okay, I know that is always going to be there and never going to go to zero. Now with real estate, the comparison is you've got a tangible asset with real estate. It's just that gold is two things that real estate's not. It's portable and it's liquid. So real estate gives you cash flow. And with
Yeah.
gold, you can put it in your pocket and run away with it, and you can sell it instantly any day of the week. You can always go and get cash for it. Real estate, nowadays there's a lot of places, yeah, you get a contract the same day. Other times you might have something sitting on the market for 6 months and no one wants a buyer. So cash flow with real estate, portability and liquidity with gold. They're all tangible assets. It's something real that you can actually touch, not just a number on a computer screen. And they go
Uh-huh.
together. It's all part of diversifying your portfolio.
Yeah, which kind of it's all you're talking about all of diversification. And then
Mm,
the other question is like when the wealthy when they flock to things, it's a couple of things. It's gold, silver, it's real estate, it's fine art, and
mm,
it's jewelry like like Rolex watches.
mm,
So talk about gold and silver and compared to fine art and luxury jewelry
mm.
as store of value.
Yeah, more accessible and more liquid than those things. It can be diamonds too. The wealthy
Yeah.
might have diamonds as well. But really, what it comes down to is if you have gold or silver coins, they're very recognizable, very liquid. You don't have to like verify them or anything. If you have fine art, someone's going to have to appraise that and confirm, oh yeah, this is what it is. Jewelry has to be weighed and tested, and there's more value in the artwork and the craftsmanship that went into it than just the raw materials that are in it. So for the super rich and super wealthy, great, yeah, own tapestries, own diamonds, that's fine. They can afford to have an armored transport and have someone assay it and verify it. But for the common man, let's say like myself and yourself, gold and silver coins are easy, liquid, affordable, and they are what they are. You have a 1 ounce gold coin from a reputable mint. It is what it is. You can trade it as is. No one has to look at it and say, oh yeah, that's fine. Diamonds artwork,
Yeah.
you have to have someone look at it. So gold and silver are just the easy, every man's money to store your wealth in that way versus all those other things.
Yeah. I know we're kind of coming to the end, and like I said, I really love this idea. We're always talking about new ideas of
Mhm.
diversification, asset allocation, and protecting and preserving your wealth as well as growing it.
Yeah.
And so, how do you get exposure to this? Do you buy the metal outright? Because I've heard, a lot of dealers are charging like 30, 40, 50% premiums on top of the
Mhm.
spot price.
Mhm.
Do you do the ETF? Do you do the miners? Talk
Mhm.
about, which is the best way.
Yeah, yeah, really good question, Chris. I'm glad you brought that up. Main answer is call me. Call Michael and talk to me. Yeah, so what I recommend is just owning physical precious metals. So investment grade coins and bars. You actually want to own something you can touch. Mining shares and ETFs, that's a way to speculate on price, but you don't actually own specific metals that are assigned to you. So buying, bullion, coins and bars, that's your gold and silver that you really own. And yes, you're right. There are dealers out there that'll charge 30, 40% extra, and it's a huge ripoff. And I hate that. I really like helping people get precious metals. I think everyone needs to have some. And I hate that there are companies out there that rip people off. So for what I do, we're on the low end of the spectrum. It's as cheap as you can buy at any coin shop or any discount website. None of those huge high premiums that are rip off, and all the strategy and advice that I can offer to help you do it the best way. So yeah, own it physically. You can have it at home or have it stored at a depository, but it's your metals and you're the only one with a claim on it. No one else can do anything with that. That's the way to own gold and silver.
Yeah. How can people contact you, learn more about you, get more educated and kind of get involved in this, especially in during these troubling times?
Yeah, yeah. Well, I like to just work with folks one on one and help them personally. So just call or text me. My phone number is area code 970 970-459-4611. Again, it's 970-459-4611. Give me a call, leave me a voicemail if you don't get me, shoot me a text. We'll get in touch, and I'll help you with the process and all the details and nuances one-on-one. And, we'll look at your portfolio and see how is the best way to do it. Is it through an IRA? Is it physical delivery? How much makes sense? And just make sure it's the best fit.
Yeah, I forgot to ask about, how you can actually own gold, and you can actually own it through tax advantage accounts. Again, these
Yep.
require sound advice and guidance, but these are just kind of ideas thrown out. So thanks so much for coming on to the podcast, and for all the audience, be sure to give Michael a like and follow on socials, reach out to him, and thanks so much for coming on.
Yeah. Well, thank you, Chris, for having me. This was great. I really appreciate it and all the good questions. So thank you.